September 3rd, 2024. It's really nice to be back from vacation. I don't love taking vacations, especially just with working on trading. It's just more fun for me. But I'm told 3 or 4 day breaks every once in a while is a good thing. So did not study very much this weekend. I usually study every weekend. It's really a great time to get in at least 3 or 4 hours on Saturday and Sunday if you can. Just a lot of free time to do work. So, anyways, we're opening basically around the middle of yesterday's range, and we've been in a trading range for the past couple of days. So it's a bit of a broader trading range, but we've been in a trading range for the past couple of days. Move some things around here. So why do I have SPY pulled up instead of the E-mini? Because on the E-mini we had this day and it affects the moving average. And so usually for the first 10 or 15, whenever we have a day like that, like a half day, the SPY is going to be the same chart as the E-mini, right? So there's maybe one bar, maybe 2 bars in a day that'll have a 1 or 2 tick difference from the SPY. But you can look at this, you can see the E-mini, and then you can see the SPY. The SPY is the main, obviously the S&P 500, and the E-mini is just a reflection of the S&P 500 in the futures market. So you can see it's basically the exact same thing. So for me, I like to trade when I don't have any influence from the half day's moving average. So I'll just watch the SPY for the first 10 to 15 bars of the day and trade it as if there's nothing happening between this close and here, because on the E-mini there was obviously a little bit of there was that half day yesterday. So I personally just don't like trading those. I called Thinkorswim and I asked if there was a way I could remove them, but they told me there wasn't. So oh well. So let's take a look at the daily chart real quick. Daily chart, obviously we're in a tight trading range. So we have it's a bit of a parabolic wedge rally, a tight channel up, and then we have a tight trading range. We're in the middle of the tight trading range. So part of you has to be expecting a trading range day. You also have to keep in mind that this might be a final flag. If it is a final flag, we usually what happens with the final flag. So this would be a bull move, and this is the final flag for the bulls. You'll get a breakout above the final flag, and then it'll reverse back down into this area. So if we do end up getting above the prior day's high, and we trade above, let's say, the all-time high, it's very possible, likely, that we're going to end up getting a reversal back into that area. I'm not sure if what was the low here. 1814. Okay. So 8:30 was an outside up day. So August 30th was an outside up day. And when you have an outside up day and the following day opens in the middle of that day's range, you can see we have an outside up and now we're in the middle of that day's range. It increases the chances that we're going to get some sort of inside day today. So you have to be wondering if today is going to be an inside day. And again, considering the fact that we're in the middle of a trading range on that daily chart, and we're in the middle of the trading range on the 5 minute chart, and just overall clear trading range price action, you have to be wondering if today is just going to be some sort of trading range day. So if that's the case, you want to look to buy low and sell high. Versus on trend days, if it's a bull trend day, you can buy high and buy more higher. And on bear trend days, you can sell more and sell more lower. But the buy low, sell high mentality works better for trading range days. You can see on the Globex 15-minute chart, I try to pull this up more often, but this is also a possible final flag. The fact that the bulls were not able to get above the moving average or even touch it is not very good for the bulls. That makes this a bit more bearish, but still, I think this is a final flag, and we might have to reverse back up to it. So what am I looking for on the open? Um, 1 second. Yeah. So what am I looking for in the open? Well, I'm looking for basically some sort of sell-off, maybe down into this area, spike, pullback, channel. So sell-off down into this area and then a reversal up. Remember, 80% of days are trading range opens. So you have to be expecting that we're going to start to go, or we're going to be sideways and we're going to get reversals. So, if you're short, let's say bar two closes on its low, you sell below it. I would not, because 80% of days end up being trading range opens. So if you sell the close at two, you're basically taking a chance that we're the 20% chance we're going to get a massive fair trend day, and it's not really worth betting on that. You can see we're already down almost 0.75%. So it'll be interesting to see what type of day we get. So bar one, a a bear close, but really not very strong. So the bears, they see the big gap down. They're hoping this is part of their bear trend. So they see big gap down. So they're hoping this is part of their bear trend and they want follow through. So you can see gap down, they view bar one as follow through. So that makes it less likely that this thing was a big bear trap, the gap down. Again, you can think of a big gap down as just a giant bear trend bar. So the bears see spike and now they see follow through on bar one. However, bar one's not a great follow through bar. So the spike might be the gap down and one might be a pause bar, which you could argue spike pullback. And now we might start some sort of channel down. And then usually when you do get a channel down, so spike down, gap, then pull back or pause on bar one, and then we get a channel down. This market cycle is spike channel trading range. So you have to be wondering if we're going to end up getting a trading range after we start some sort of channel down. Again, bar 38. So obviously we have a big reversal up from yesterday, bar 38 through the end of the day, bar 78, and we're getting a big gap down from that. So do you think that we're going to magically, or not magically, but do you think we're going to undo all of that bullishness? I'm actually going to turn this study on as well. Sorry. Let me check something. All right. I can change the bar counter to black on this screen. I don't usually take suggestions on how to, the things I do in my videos because, if I did, I've gotten like a million suggestions. And so a while ago, I decided I was going to be done taking them. But a lot of people have asked me to change the color. I've had a lot of people ask me to change the color of the bar counter and zoom in a little bit. So this screen, I don't actually trade on this screen. I have a different screen on my other monitor. So I will make an effort in these videos to make, at least during these, the daily reviews might be a little different because I like it the way I like it with the daily reviews, but these I'll make an effort to be a little more zoomed in at times, and I'll try to remember to change. I can actually just save this, so I can just save this as my workspace, and now this bar count will be saved as black on this particular screen. Um, but what I was saying was, yeah, I'll try to be a little bit better with that because I have had a lot of people ask me about similar things. But the most people watch on their phone. I can see in my YouTube analytics, most people watch on their phone, and obviously I am on a computer and have a 13-inch or 15-inch monitor and an 18-inch monitor. So to me, this stuff looks good. But anyways, bar one, the bear bar, we have tails on the top and the bottom. Bar two is possibly follow through. So the pullback one and then follow through channel two. The bulls want a reversal up. So they want bar three to be a bull bar closing, relatively on its high. Something like, well, a bull inside bar closing on its high somewhere up here is a possible low of the day. So some traders might take that for a swing. I think that would be a credible buy if we got it. Maybe a 30% chance, 35% chance that it's the low of the day if we do get that sort of pattern. Because you have to keep in mind on a higher time frame, right? So if we just pull up a 15-minute chart, this is all pretty strong. Let's demonstrate better on the 30-minute chart, I bet. Right. So look at this. This is what you're competing against if you're a bear. So do you think that we're going to reverse these four really strong bull bars? Again, we had a really tight channel up on the open. So do you think we're really going to reverse these four strong bull bars with this? Probably not. So you have to keep that in mind. We might need to get a second leg up. This probably needs a second leg up. So I'm a lot less open to selling right now. I'm more looking to buy if we can get a bull bar closing near its high. I think if three closes on its high, that's going to be a credible low of the day. High probability, probably not, but worth taking, yeah. So if bar three looks maybe something like bar 38 yesterday or bar 19 yesterday or something like that, then I would personally be interested in taking that first swing. But it's a swing, right? You have to keep in mind it's a possible low of the day, so you're not buying it and managing it really closely. You're buying it and you're going to walk away. So if I do take the buy on bar three, I'll probably pause the video for 20 or 30 minutes or until I get stopped out. Again, it's not going to be a high probability trade, so I will probably lose. But if I do win, my reward will obviously offset my risk. What do I need to sell here? Well, I don't like bar two. I don't like bar one either. So even if three is a bear bar closing near its low, I'm not selling. If we start to collapse, maybe I'll sell. But I think for me, if it starts to sell off without a pullback, I'm probably just going to let it go because that doesn't usually happen. Just wait for the trade I want. So I did pull up the mini because right now I'm trading on SPY, so it's just position stuff. Um, but if this closes on its high, I'm going to take it. Okay, so sorry, I was just checking video. So okay, so it did not close on its high, so I'm not going to take that. So it's more of a doji bar. Is it still possibly a low of the day? Yeah, but I'm going to wait and see if we can get two or three consecutive bull bars closing on their highs in order for me to take that. So what do the bulls want? Well, bulls are hoping that bars one and two are a bear trap, and that bar three is the signal bar for the bear trap, and that we're going to start to rally. And they want, well, had it closed on its high, what you'd be looking for. So had it closed on its high, what you'd be looking for, basically swing up to maybe this area, maybe double the opening range, something simple, simple profit target like that. You could, you'd be risking, I don't know, 60 cents trying to make 250. So 4 to 1, 5 to 1, maybe 40% chance you get it. So that would be a reasonable trade. However, as you can see, we got a disappointing close on bar three. So not really willing to take the buy above there. You can see we traded around the low of bar two. And if you sold the close of bar two or you sold the low of bar two, you're a little bit disappointed in how three looked. So you can see some bears were just buying back their shorts, and that's part of what was causing this bounce on bar four. So what if four is a bear bar closing near its low? I'll let it go. Some bulls would see it as a second leg trap, and then if five is a bull bar closing near its high, that'd be a credible buy. But the micro channel down from one, again, this is theory, so theoretically assume that bar four looks like bar two. This is the context I'm going to discuss here. If it does look like that, then you can argue, the bulls would argue it's a second leg trap for the bears on the open, and that we're going to get a reversal up, and that this is all just a leg in a trading range. We might have to test down into this area towards the bottom of the channel before we start to get any sort of bounce. The bears see the bear channel and they're thinking this is just a pullback and somewhat of a low one short for the bears. But I'm not really that interested in selling here. I'm a lot more interested in looking for a reversal. Again, 80% of days are going to get a reversal, reversals in the opening range. So do you want to be betting on the 20% of days where you get a trend from the open, or do you want to be betting on the 80% of days? I remember, the problem with trading, the thing that makes trading hard is that you can make bad decisions and win. So you don't know. I remember one of my favorite trades when I started was if we would get a big gap down like this. So we'd get a gap down like this, and let's say one would close on its low. I would just sell below it, put a stop above it, and take a chance that it was the high of the day on the 20% chance that it was. And it was really pretty unpleasant. I remember taking that, and I just felt like I was, I would occasionally win it, but just every time I take it, I was just felt like a donation. So you don't want to be taking trades like that just stink mentally to take. You want to be taking trades that are fun. Fun is important in trading. So yeah, you want to make money. We have to make money, right? So you definitely have to get through a lot of difficult. I'd say the first 3 years of trading are really difficult mentally, and then you start to figure things out a little bit. And by the time you're, fourth, probably by the time you're about 5 years in, if you're studying 7 days a week, if you can work on it, I'm very fortunate to be able to have been able to and be able to work on the market 50 plus. I don't know. I think I used to do like 70 hours, but it became too much. So if you're able to work on the market 40 to 50 hours a week, I think by year five, you'll have a pretty good grasp on what's going on with the market. And things become a lot more fun when that is the case. So bar four, we're trading below bar three. There's probably buyers not too far below. What if five is an outside up bar? Yeah, it's probably going to be okay. It's okay to buy, but again, it's not going to be great. Even if four closes on its low, I'm not that convinced four is going to close on its low, but even if it does, it's really not worth selling. You can see we're getting a disappointing bear close on bar one, a disappointing bear close on bar two. So it's probably very possible that four is disappointing. And if four isn't disappointing, I think five will be disappointing. So four, the bear bar. Again, closing above the three low. So the Bears were unable to hold a breakout below bar three. Are we always in short? Yeah. I think we were probably honestly always in short from the gap down and bar one. So I would say we've been always in short all day. However, the context is really not all that amazing here for the Bears. We're getting relatively low in what looks like a trading range that's forming. So, where are the strong consecutive bear bars closing near their lows, right? We don't have anything that looks like this that could lead to, three legs down, one, pullback, two, pullback, three. Obviously, the pullbacks can change, right? We get a one bar pullback and then we get a more complex pullback, a wedge pullback here to the moving average and a reversal down. So we might sell off. It's very possible, but I'm not really that interested in shorting here or here. None of that is really all that interesting to me. I think that it's better to just wait right now. Again, we are in a tight trading range on the daily chart. So we're in a tight trading range. So when we start to get low in the trading range, there'll probably be buyers. When we start to get high in the trading range, there'll probably be sellers. It's possible we have to get to the moving average, but I think it's better to wait. Actually, you know, last week was a bull close, so I pay attention to E-mini weekly chart. So what was last week? So last week they said it was a bear close on the E-mini, and that's what I care about. So to me, we got up here. The bulls who bought this close obviously unhappy with how this went, and they used the second leg up to exit their longs. We're probably going to be a little bit more bearish this week, but the reality is there's probably buyers somewhere down here. Did we trade below this low? 73, 77. So there's probably buyers not too far below here. It is a trading range, so the pullback could be a little bit deeper, maybe to 5,500, something like that. Big round number, and the moving average could get up into that area. So if we do pull back, I would imagine 5,500 would probably be the target. I don't know what percent that is. So, 3 or 4% pullback, something like that. Monthly chart, you can see this ended up being a bull close. I think this is going to trigger. So I don't think we're going to get a big bear bar closing near its low. I think we're going to have to trigger above the August high and see what's up there. We're probably going to have to go above the all-time high as well and see what's up there. So sell off for the bears on the open, yes, for sure. Bear micro channel all the way down. However, for me, bar five looks really parabolic. So I'm really not willing to short. And we're only 2.5 minutes into the bar. So what's going on here? Why is there a tail? Well, some bulls notice we're only 2.5 minutes into the bar and it's already a 10-point bar. They don't think it's going to become 20 points. So they're buying at the market, basically betting the bar is not going to get bigger. So if they're buying in this area as the market's falling, they know they have 2.5 minutes left for the market to get bought up since it's an overshoot of this bear channel. And what they're basically betting against is the market falling another 10 points because the reality is, even if it stays down here and closes on its low, they can get out pretty much break even. So odds are the bar is not going to get a whole bunch bigger. And you can see they bought down here. Some of them might scalp out. I don't know. Theoretically, if they bought the low, maybe they can scalp out with 5 points. But buying anywhere in this area, a lot of those traders are going to scalp with a couple points. We do have an open gap with the one low, the three high. So that does exist. What if this closes on its high, bar five? I'll probably buy it. Problem is the risk is big. So the advantage to bar three was the risk was not very big. Interesting. So it looks like bulls just took profits. So the bulls who bought, they ended up scalping out instead of buying more. So that's something to pay attention to. I want to check something. So let's look at a 1 minute chart. Okay. So limit order bulls, let's go to the SPY or the E-mini. The limit order bulls who bought down here were not quite able to make money. It touched their price, but I don't think it went one tick. 23.25, 23.25. So the limit order bulls who were buying for a scalp, trying to basically get back, they bought down here and were trying to scalp out around the 4 low. They were unable to do so. They were definitely able to make 5 points. A lot of limit order bulls were able to make 5 points there. So it's slightly less bearish, but it's still the bulls scalped out. So we're going to end up getting a decently big bear bar here. And you can see a lot of the bulls, I don't take this kind of trade. This is just things that, seem to make sense. A lot of the bulls, let's say you bought for any reason, as bar 5 was falling, you're probably not really at a big loss right now when the close of bar 5. So you can probably exit your trade pretty close to break even and just be okay with it. So what do the bears see? Well, the bears see probably some sort of sell to close bar, right? 4 or 5. So it's theoretically sell to close, but it's really not all that great. I think it's really parabolic. And again, we have the tight channel down from bar 1 to bar 4, and we're getting a breakout below the tight channel down. A lot of times when you get a breakout below a tight channel, the market will try to test the other side of the tight channel. So if we do bounce, the first target somewhere up in this area. Also, the most recent sell climax high. You could argue 4 and 5 is a sell climax, so that's fine. You could say the high of bar 5 is the sell climax high. I think you could also make a pretty good argument, though. Or sorry, the high of bar 4. You could argue 4 and 5 is the sell climax, so the high of bar 4 would be the target for the bears. However, I think that the high of bar 5 makes a lot of sense as well because it's such a big dramatic bar breaking out below the low of the tight channel that I think bar 5 is its own sell climax high. And so the high of bar 5 is a reasonable target as well. But again, no, we're creating patterns that look like the market is trying to bottom, but we haven't bottomed yet, and we do have an open gap with the 1 low and the 3 high. So for me, I'm not selling this, right? I'm not interested. I've been flat the whole day. I'm not really interested in selling down here. Some traders who are good at scalping, they're better traders than me, have probably made a bit of money today. Doing what? I don't know. Maybe sold to close a 1 for a scalp, maybe sold to close a 2 for a scalp, something like that. But I'm not really sure there was anything all that reliable today. Again, the best thing you can do until you're making a living trading, until you're consistently making a living trading, is look for the best 1 or 2 trades per day. So I know it's impossible, and you're going to end up not doing that, but eventually you'll start to realize that the best way to do it when you're starting out is to just look for the best 1 or 2 trades every day and take those. And then once you can consistently make a living doing that, then you can add in, some scalps, maybe some limit order trades. But doing that stuff until you're consistently making a living, I think is important. And it's an important part of trading, the patience aspect. So what if 6 is the bull bar closing near its high? I'll probably buy. It's a little weird trading on bar 6 because bar 7 can be so volatile, but I still think it's okay. I think that bar 5 is really climactic, and 6 is going to be a potential low of the day. And we're in this area, right? I mentioned we might have to come back to, I thought 3 might have been good, but we had to pull back a little lower into this area. Were we closing gaps? This gap, something like that. Were we testing the swing point, right? The 38 high. So you knew there's probably going to be buyers somewhere in this area because of yesterday. So if 6 closes on its high, I'm very likely going to buy it. What am I going to do if I buy it? Well, I think it's a trading range day, right? So I think this high is a possible target, but we could go higher. Bar is getting pretty big, so some bulls might buy a 50% pullback. They know that the channel down is tight, so there's initially probably going to be sellers. Let's just say 6 closes right here. Perfect. It's still a reasonably big risk, so some traders might be more interested in buying around a 50% pullback of the bar if we can get down to here to reduce their risk. Am I going to do that? No, I think I'm just going to buy directly above the bar. You gotta keep it a little bit more simple. It's one of those things where I'm very aware that it might pull back to 50%, but I don't know. I just like to keep it as simple as possible. So I see a good looking bar as a potential opening swing. You look back at the chart at the end of the day, and I know it's easy to see the scalps, etc. at the end of the day, but you can see that really it's usually pretty clear what the best one or two trades in the day were. And when I see something that's like that, I don't try to get fancy with limit orders and pullbacks. I just try to take the trade. So even 38 didn't quite close on its high. Some traders more interested bought around 50% during 39. But for me, I wasn't trading on this day, but had I been trading and bought above 38, I'm just buying directly above. I know that we're following 5 straight bear bars. So there's probably going to get some sort of second leg down to test the 37 close, which we did during 39. But that's just not worth it for me. So doesn't look like it's going to close on its high. And see how fast the bar moves. So bar 7, like I mentioned, can be really volatile sometimes, and that might be what's happening here. So probably just better to wait. Let's say we trade below bar 7, or let's say we trade below bar 6 on bar 7 and get another big bear bar and then another bull bar closing near its high. That would be a parabolic wedge on the open. So the first move down to bar 3 and then pull back 4-5. Or sorry, then the second move 4-5 and then a second pullback 6. So then maybe 7, another bear bar, and then 8, a bull bar closing near its high. Possible parabolic wedge on the open. It's definitely an issue for the bulls that we're not getting. We haven't traded above another bar yet today. That's a very real problem. However, this is just not as bearish as it could be. 6 is too big of a reversal. Yes, we did not trade above 6. Yes, we traded below it. You can see bulls probably more interested in buying below than they were above. However, I'm look at this one. Look at this area, right? Last time we were in this area. Oops, sorry, I'm on the wrong screen. We were in this area over here. There was buyers. We got a bounce. We're in this area over here. We got a pretty major reversal. So what do you think is going to happen over here? It's not as likely that we're going to get a bear breakout. What if 7 closes on its low? You could probably sell for a swing, but I don't think it's all that worth it. Even if 8 is a small bear bar, let's say it's like a doji bar, it's going to be pretty tempting to buy it and just take a chance. We've seen the low of the day. Maybe ideally 7 would be an outside up bar, not closing too far above the bar 6 high, and you could just buy for a swing, call it a day. Different swing trades are different, but swing trades are all obviously different, but there's a lot of times on the open where you can get a trade that you can just take and then leave it alone for a few hours and come back, and you'll probably do a lot better just leaving it alone than you would managing it, because you will inevitably overmanage your trades. So turning into a really, really climactic bear bar. So how do I feel about the fact that I haven't taken any trades yet today and I'm missing the sell-off? I don't care. This is, I don't look back at any of this and think to myself, I should have sold. You could have sold for a swing, maybe below 4, but, I don't look back at any of this and feel any sort of regret. I think that, I didn't take, I'm totally fine with the fact that I have not taken any trades yet today. Sometimes you look at a sell-off and you missed it, and then you think to yourself, well, I wish how could have I gotten in? So that's a good thing to think to yourself. Whenever you're missing a trend, you should think to yourself, well, how could have I gotten in here? If you look back and you don't see anything that really jumps out at you as a trade that you would like to take, obviously you can say things like, well, I could have sold the close of 4, I could have sold the close of 5. Those were technically sell the close bars, and yeah, it's all well and good and it's true. But if it's not your trade, I think it's important to define what type of trader you're trying to become. And again, what type of trader you're trying to become should start out as a swing trader, and eventually, over the course of years, you can become a scalper. But trying to scalp before learning to swing trade is probably a little bit like trying to learn how to run before you learn how to walk. But ultimately, if you want to try and scalp, then that's fine. But just make sure that you can look back at the end of the day, and the trades that you took are the same trades you would have taken in hindsight. So be really, really, really picky. Sorry, I just got a notification. It's a notification for Boeing. That's not ideal. So I don't know. That trading range. Maybe we get a rally. I like this. To me, I think we're gonna get back there. So it's pretty interesting when we're down here. A good pair of bull bars here. Wedge, 1, 2, 3, maybe 2 legs sideways to down. Is the second leg down done? I don't know. But I think it's interesting. Interesting to look at. So I'll probably check this out again towards the end of the day. We'll see where we get to. I wouldn't be surprised if we got down to the biclimax low. So I'm going to be a pretty big cheapskate with Boeing, but we got 3 straight bull bars here. And that makes me think these are legs in a trading range and more minor reversals. So something to think about. Maybe I'll end up buying some stock in that for some sort of scalp. So bar 8, I think usually if you're going to end up getting a bull bar here, it's going to start become a bull bar pretty soon. You're not going to get usually not going to get a bar that forms in the last minute, becomes a bull bar in the last minute. Again, we still have an open gap with the 1 low and the 3 high. We now have formed the second open gap with the bar 5 low and now the bar 8 high. So the bears trying to create a second open gap and keep it open so that they can say, well, it's possible small pullback bull trend day or bear trend day. We have 2 open gaps. Do I think it's going to be a small pullback bear trend day? I really don't. I think that first off, this is really climactic open. A small pullback bear trend day usually moves in a fashion where it's slower and it looks like it's going to reverse constantly. You have a couple of breakouts and then it constantly looks like it's going to reverse, but it just never does. So this is a little too parabolic for me. I thought 1 through 4 tight bear channel, good for the bears, but 5 parabolic, 6 a big, relatively big reversal up, looked bigger at the time, and then obviously 7 a huge bear bar, but again, just looks really, really parabolic to me. So I'm okay. I'm all set with selling here. I'm not really that interested in doing it. However, the first reversal up is going to be minor. We're only trading below bars now. We're not trading above bars. So first target for the bulls would be the bar 5 low. The long order bulls who bought below bar 5 and bar 6, scaling in, trying to make money. So that would be the first target if you were a bull here who was long or looking to get long. The second target would be the bar 7 high, the sell climax, the most recent sell climax high. So be interested to see what we get here. If we get a good looking bull bar, I might take it. It's kind of going to depend. Some bears are going to sell a 50% pull. Obviously, bar 7 is a big bar, right? So the risk is large, but some traders are going to look to sell a 50% pullback of it. And I mentioned that during bar 6, bar 7 can be weird. Theoretical, or there, a lot of times there's some sort of report at 10 o'clock or whatever, 10 o'clock Eastern time. But obviously, I don't care about that. I don't care about a report. I just see what I get. I see 7 looks parabolic to me. It looks like a parabolic wedge on the open, bars 1 through 5, and then 7. Or 1 and 2, pullback 3, 4, 5, pullback 6, then 7. Climactic parabolic wedge on the open. Parabolic wedges on the open aren't that uncommon. This goes on its high. I'm probably going to buy it and use a stop, a measured move down of the signal bar in case we do get some sort of second leg down. So that's not what I wanted. I wanted it to close on its high. It's still a parabolic wedge and it's still a possible low of the day, but probably more of a minor reversal. I do think we're going to trade above bar 8. So the bears have a micro channel with bars 1 through 8, and I believe it is going to end on this bar. So I think if you sold the close of 8, you're disappointed with 9. You're probably going to try to buy back your shorts around break even. So we might get a little bit of a bounce here. Maybe we get a bounce and we close the gap with the 5 low, and then we pull back a little bit more, and then get a reversal up around bar 16 to 20, some sort of reversal up in there in that window. That's very possible. And if we do get that, that would be a credible low of the day. Do I think bar 8 is going to hold as the low of the day? I do not. I think that if it closed on its high, it was more likely it would hold as the low of the day. But I'm not going to buy above bar 8 with that size of a tail. Can you just buy above bar 8, put a stop below it, and take a chance? Probably. I would say probably not wrong, but I think it's just a lot better to wait and see if you can get consecutive bull bars closing near their highs. So let's say 9 is a bull bar closing near its high. It looks something like like bar 16 yesterday, let's say it looks like that, I think that would be a credible buy, taking a chance that the first reversal down is going to be minor. But the Bulls need something pretty good here. Otherwise, I do think we're going to get one more leg down. Now, it could be we have parabolic wedge, and we're going to try and get a breakout below the parabolic wedge. Breakout, and then let's say we get a failed breakout below the parabolic wedge. And well, okay, let's go over the scenarios, right? So first off, first scenario, we keep going and we don't trade above this. I do think we're going to get above here and try to close this gap. I'd be a little bit surprised if we did not. But the Bears are trying to now get a breakout below the parabolic wedge and the start of a big bear trend day. Bulls are trying to get the bull bar closing near its high here. They know we're probably going to pull back, regardless. Even if we start to go up, we're probably going to get some sort of pullback because this is so strong. It's parabolic, but it's still strong, right? So strong, in this context means it's going to get a second leg down. So even if we do start to bounce, we're going to pull back, and then if we do get another reversal up, it'll probably be from a lower low. Unless, obviously, we start to get good-looking bull bars closing near their highs, then it could be from a higher low. But until we have evidence of that, to me, still not that great. The Bears are hoping to break up below the parabolic wedge and keep the gap open with the bar 5 low and the bar 8 high. So still pretty interesting 9-bar bear micro channel on the open. So you can see we're breaking out below bar 8, but I'm not really that convinced this is going to be a big bear trend day. The Bears have a micro channel, really strong. It's good for the Bears. And they have open gaps. They have a lot of the things. Sorry if you can hear sirens. Just wait until they're gone. Should be a couple more seconds. So it's good for the Bears again, where they're keeping the gaps open. They're doing the things they need to do, and they now have a really big surprise on bar 7 and bar 9, a bear bar closing near its low. But I am not really all that interested in selling with all the pauses we keep getting. The reversals up for the Bulls are not strong. I think 9 is a swing sell, so you can definitely take 9. What are you taking a chance on if you're selling 9? Well, you're taking a chance that limit order bulls just give up, and we start to get a measured move down of the parabolic wedge somewhere down here. Is all that likely? I don't think it's very likely. But if you did take the sell, you're trying to make 3+ points, and you're only risking a point. You can probably just put a stop above 9 if you're going to take that sort of sell, because the reality is if it's going to sell off, it should just collapse below bar 9. So we shouldn't go up here if we're going to. I guess the stop would be above 8 because it's a little bit higher. So the stop would be above 8. But if you're going to take the sell below 9 and you're betting, okay, you guys can't see that. Hold on. Sorry, I drew the measured move on the wrong thing. If you're going to take the sell, you're basically betting that we have a parabolic wedge. Everyone sees the parabolic wedge, but the Bears want the breakout below the parabolic wedge and a measured move down to somewhere down here. So if you sell below 9, the market should collapse below 9 if this is going to work. If this sell is going to work, it's a swing sell. I'm not taking it, but it is a swing sell. And stop above here, maybe risking 12, 13 points, trying to make 35, 36 points, 3-to-1 risk reward, maybe 40% chance to get it. So I don't think there's anything wrong with. Obviously, there's nothing wrong with being short right now. We have a very micro channel, but we keep getting pauses. So bar 5, pause bar 5, and then pause bar 6, 7, pause bar 8, 9. What do you think is going to happen on 10? Maybe a pause bar. Possible that the parabolic wedge is more like this: 1, 2, 3. So it might be more like 1, 2, 3 rather than 1, 2, 3. So it could be spike, pullback, parabolic wedge channel, something like that. However, the first reversal up is definitely going to be minor. Unless the Bulls would need a pretty good looking bull surprise to convince traders that it's just a low that it's okay to buy. And even if they get a good looking bull surprise, and by good looking, I mean an outside up bar closing on its high. So let's say bar 10 closed up here. Even if they got that, a lot of traders would look to buy a 50% pullback instead, I think. So if you can be short below 9, that's okay. But again, you're selling low in what's probably a trading range, and you're selling pretty far away from the moving average. You do it, like I said, and you're just taking a chance we collapse. But we're 2.5 minutes into this bar, and we're not yet collapsing. So if 10 starts to bounce, what that is probably mostly due to is bears who sold below 9. And a lot of algorithms, and traders, they'll just sell below 9, right? They'll take a chance. and you get to be 2 or 3 minutes into the bar and it's still stalling around your entry price, then they'll exit. Because the bears, they want this to be somewhere down here already. They want the collapse to be happening, and it's not quite happening yet. So I think a lot of traders are waiting to see, are the bulls, are the limit order bulls who were here and here, are they going to give up and just admit that they're trapped and take a loss, and that would cause 10 to collapse? Or are they going to keep buying more, and the bears who were sold taking a chance, the limit order bulls are going to give up? Are they going to give up, and then we get a bull bar closing near high? Like I said, I think a bull bar is a little more likely here, and I did not sell 9. I don't take those kind of trades, but so am I buying above 10? If it is an outside up bar closing on its high, I believe that would be reasonable. Anything other than that, kind of tough. What if it just closes like this? Well, still a parabolic wedge, but not worth buying, and kind of tough. If you sold below 9 and 10 just looks like this, like kind of a bull bar, but a big tail on the top and a tail on the bottom. How are you going to feel about your short? Probably not great. You're probably going to want to exit. So if we trade back down to the bar 9 low, when bar 10's a bull, some sort of reasonable looking bull bar, those bears are probably going to buy back their shorts. You'd have to imagine. Kind of considering right now, the risk is really small on bar 10. If it's a good looking bar, microchannel's a problem. Don't get me wrong. It's a big issue. But if it's a good looking bar, might make sense to buy small. Buy small with a stop that's a measured move down. I think that's okay. Um, that's not the bar I wanted though, so I'm not taking that. Are we gonna? I think we're gonna trade above bar 10 and start to create some sort of reversal up. But I'm not interested in buying unless bar 11 is also a bull bar closing here at the high. So if 11 is a really good looking bull bar, yeah, sure, buy the close. I think if you're a bear, you sell below 9, you probably just get out above 10. Probably playing with fire a little bit if you're staying in the short. You can see now the moving average on the E-mini and the moving average on SPY are pretty similar. So okay to just look at the E-mini now, I think. So again, probably sellers. Well, we traded above 10, so the bear micro channel is over, but probably another leg down because of the micro channel, and 10 is not a good signal bar. But again, bear bar, pause bar, bear bar, pause bar, bear bar, pause bar, maybe bear bar, but then what do you think is going to happen? Probably nothing all that great for the bears. If 11 is a good looking bull bar closing near its high, then I think it's credible to take the buy. But it's going to need to be like I said, like 16 yesterday, something really awesome. I'm going to turn the screen off for 5 or 10 minutes, and then I will be back. Okay, so we have another leg down on bar 13, but we have 3 bull bars, 10, 11, 12. So again, I'm not really interested in selling. What if you sold below 9? You exited above here. Do you resell? I would not. I think that, this is just really not that great for the Bears. I think your time is probably better spent waiting to see if we get a good looking bull bar. Now, the problem, if we get a good looking bull bar here, let's say the bull bar looks like, again, I'm continuously using this as an example, but bar 16 yesterday, just a really good looking strong bull bar. Well, the problem would be you'd be buying towards the top of a tight trading range. So this, a tight trading range. See, we went up to the bar 9 high, the sell climax high. So the top of a tight trading range would be a problem, as well as the risk is going to get rather big. So, and it's bar 14, right? So if it's bar 14, that's not necessarily the spot to look for a reversal. You want to look for a reversal around bar 16 to 18. So I'm not sure how convinced I am that these gaps are going to stay open, especially the gap with the 6 low and the 8 high. This does not look like strong bear trend price action to me. This looks really parabolic. The 14's a good looking bull bar. Am I probably going to take it? Yeah, probably, but going to need to be perfect and a possible low of the day. Again, 14 would need to be perfect. What if it just does this all day? Well, that would be a first. I've been trading along, not really a long time, I suppose, but 5 years. Uh, and the market does not do this for 81 bars. So yes, we do have, the moving average. It's moving. A lot of bear trend days, the moving average will move down in this sort of way where it's consistent and just going lower. But for me, I'm not really willing to do anything. So I 14 is a big bull bar. I would want a bull surprise here. I'm not buying a small bull bar, but if 14 is a bull surprise bar, probably just buy, take a chance. It's the low of the day, something like that. But if it is a bull surprise bar, very likely it's going to get a pullback to a 50% pullback or something along those lines. So better to wait, or you could wait and wait for that pullback, but not necessarily better to wait. That's not what I should have said. But you could wait for that pullback, see what you get. Not an unreasonable thing to do. But again, I'm not buying unless it's really exactly what I want. Some weeks have a lot of trades in the opening range, in the opening 10 to 15 bars, and I would say about 1 week out of the month, I'll just find a bunch of trades on the open and be good for the day, and then probably 1 week of the month, maybe to 2 weeks of the month, there's just not really anything great on the open for me, and then that other week, the fourth week of the month, so let's say 1 to 2 weeks really difficult. 1 week usually really easy, and then the other week usually pretty mixed. So the key is when the market gets difficult and it becomes something that's not easy for you to trade, then just being a lot better at sitting out and being more patient. So you're going to find a lot more success if you're able to do that. So not looking like it's going to give me anything to take here. I'm probably just going to wait, give it more time. Again, I'm not particularly interested in selling. It's been difficult for stop order bears. Maybe if you had sold below 4, but that I don't want to do that. And you sell below 7. Well, if you did, you sat through 2 reversals and you're currently at a profit of basically 5 points. You made a 5 point scalp. If you sold below 9, you sat through a really deep pullback and you're up 2 points. So really different. Limit order bears able to make money today for sure. But I think this has been a problem for stop order bears. Order bulls. Maybe they bought below 8, right? Scaled in 5 points lower. So yep, scaled in 5 points lower. They were able to. So they buy below, they scale in lower. They made money during bar 12 or it's bar 11, even bar 10. The limit order bulls making money. Bulls they buy below bar 10, or the bulls even better they buy below 12. They've scaled in 5 points. Let's see if we get back to the bar 12 low. The more limit order bulls can make money, the more likely that we're going to get a reversal and that stop order bulls will be able to make money. If we do start to get a reversal up, you have to be wondering about the open gaps with, I think the bar 5 low and the bar 8 low is an obvious gap that could close. And the reach for the bulls, the stretch for the day would be closing the gap between the 1 low and 3 high. Do I think that's going to happen? I don't know. I think the bar 7 sell climax high is going to be a pretty big deterrent, but we'll see. So again, the Bears, they see a bear surprise 13 and an inside bar low 1 short on 14, but I'm not selling a low 1 short down here. Probably not really worth it. We're hoping for some sort of reversal up and maybe a bull surprise bar on bar 15. Even if we do get a bull surprise, I'm gonna wait until around bar 18 to take a trade because 15, 12 through 15 is a weird window where trades don't work as well. On the open, you probably want to be looking for obviously if the context is great, then whatever. But if it's a little iffy, it's a little better to take a trade between bars 16 and 20 than it is between bars, whatever 11 through 15, something like that. So looking like we might end up getting another bear bar here. But again, difficult to short. Bulls, maybe some sort of high two, but not doing anything with it. So, I'm happy to sit out here. No issues with sitting out of this type of trend. Just gonna look for my trade today. I think my trade today, well, there's a couple of things I'm envisioning. You could either get some sort of reversal up and then a pullback and then like a lower low, higher low major trend reversal, something along those lines. We could get a pullback and then a low too short at the moving average, which you could sell for a second leg down. I think that's okay. Um, but I'm gonna need a lot from the bulls to buy, the same way that I needed quite a bit from the bears to look to sell. So let's go back to that 30-minute chart, right? So you get this, you get this. This is strong, but you also have this, which is reasonably strong. And you have a pullback, bar one, pullback on this bar. Maybe you get a pullback on this bar, and it's some sort of on the 30-minute chart, it would create a parabolic wedge on what you would assume is a lower time frame, and the lower time frame could be the 15 or the 5-minute chart. So 15-minute chart, messy, tough to see, but again, not looking like the strongest bear trend. And I could be wrong, and it could go down all day. It might. I'm actually starting to get to the point where I wouldn't be super surprised if it did because of these open gaps, but that's fine. It can just go. If it does go down all day, if it does do that, what's usually happens during small pullback bear trend days is you'll go down for the first, I don't know, 18 to 24 to 25 bars, and then you'll get a bounce to the moving average, and then around bar 40, you'll get the start of a second leg down. So for me, this first leg down wasn't really tradable for me. And if we start to get, like I mentioned, pullback around, I don't know, bar 24, 25, and then we go sideways till around bar 40, and then get a reversal down for a second leg down, that would be tradable. A lot of it's dependent on how said pullback looks, right? If it ends up being, we get 5 straight bull bars that are huge and really strong, then it makes it less likely that I'm going to look to trade that. But if we get a couple of relatively weak bull legs, then that would make a little bit more sense. So 16 breaking out. You can see it's again climactic, but we've had a lot of climactic bar today, and the market has continued lower. So this does become a big bear trend day. What's the target? Maybe the moving average, somewhere down here. I don't think we get into this gap today. We're going to get into this gap, but I don't know what happens today. And this is still, bigger picture. The lows here, still a tight trading range. So 54.73, 54.98. So basically, there's going to be support for some sort of bounce in those areas. Again, I don't know if it's going to be a big bounce. It could be where the pullback starts for the second leg before we get a second leg. But yeah, so again, I'm looking for one of two things. This is pretty strong for the Bears. So if we rally back up and get a two-legged pullback for 10 to 15 bars, and then we do not close the gap with the bar 5 low and the bar 8 high, then I would look for to sell a second leg down around bar. Generally, I say 40 between 38 and 42 is like the real sweet spot. So any of those, you can see yesterday, Friday, we got a reversal on bar 49, 39, sorry, 38. So 38 to 42 is the general sweet spot. So that would be fine. Or like I said, if we get some sort of good looking reversal up, I'll take that. But This has just not been the type of trend that I am going to do well in, and so I have not taken any trades. You mentioned my general sweet spot for trades is if I take between uh, two and one to three trades a day, but I think that really 8 to 11 or 12 trades a week, seven to 11 or 12 trades a week. So you know, two a day, max of three a day. I think 1 to 2 a day is better. So that's why when I'm on the side of 8 to 10 trades a week, I usually do even a little bit better than when I'm on the side of 10 to 12 trades a week. Or bear bar micro channel. So the bears who sold below 14, let's see, were they able to make a 5 point scalp? They were. So let's see if they can make 10 actually. So they were able to make at least 5 points, and that was bar 16 again, climactic, breaking up below a lot of things. See what we get out of bar 17. 17 is a good looking bull bar. It's probably going to be a reasonable swing, but it's going to be a minor reversal. Is it better if it's an outside? So we did trade below it. As you can see, we traded below it on bar. Get back on the mini. On bar 17 here, we did trade below bar 16. So what if it traps those bears in and we get a bull bar closing near its high? That would be fine. A bull reversal bar would also be credible. You don't want the bar to get too big. It's probably going to be a minor reversal. So if you're buying, you're probably looking to get to the most recent buy climax high or sell climax high, which is up here. Technically, 16 would be the most recent sell climax high, but I think that the 13 high would be reasonable as well. We're also in that window where you might get a reversal, that bar 18 window. So yes, some traders have been selling, making money on scalps, or swings for if a trader sold below four. I'm not going to sell below four. Again, micro channel, tight channel, but that's just really not my trade. So if you took it and you did well, good for you. But for me personally, I'm not interested in that. But even if you did take it, you probably felt it a little bit. It was difficult to hold short the whole time. So we are theoretically still on the swing sell below 9. Those traders, how much were they able to make so far? 12 points. So pretty good. So a better question, more productive question, I suppose, would be: what if 17 closes on its high? How much are you looking for? You can say the moving average. So let's say it closes somewhere up here, right? Something like that. I don't think the moving average is a wrong answer to think of what you're going for. Two legs sideways to up is a possible answer. The 13 high is a credible answer. If you're really stretching it, you could try to say the 5 low, but that's not great. I think that's a bit of a stretch right now. We've sold off a little too far. Um, but you just bears to exit maybe something quote unquote arbitrary, 20 points, which would bring you, so if it was this size, 17 high, 20 points would bring you up into this area, basically the bottom of this gap. So that is possibly a credible answer as well, assuming that 17 stays at this size. If it does, let's say it's exactly what it is right now and it closes on its high, I will be buying. Just trying to zoom out a little bit, think about bigger patterns. Zoomed out on my other chart. You know, maybe one thing to look at, you just zoom out, some sort of expanding triangle, something like this. That's possible. It's one pattern for the bulls. Um, You got your wedge 1, 2, 3, 1, 2, 3, something like that. But really, yes, yes, triangles, etc. What I'm seeing is this is a big trading range that's been going on for a couple of weeks, and we're towards the bottom, and we're trying to break out of the low. Maybe we get it. The market's moving to the downside, and been doing so in a way that it's not giving the stop order goals a good setup, which really hasn't yet today. So it's possible that we do get that sell off, and you can see on bar. Oh, you cannot see. Hold on. So bar 17 here, the Bulls, another area where they might be able to get a reversal and they're unable to do it. So that's pretty important. Again, I'm not going to sell down here. I'm going to wait for a pullback and sell a reversal down from the pullback, or look to buy a reversal up, depending on how it looks. But the reversal up, let's say we get a weak reversal up and I don't take anything, then I think that the sell off or the second leg down is a better swing trade. So what do I want to see? I want to see a reversal up, obviously, but if it's not something I get in on, I don't really care. I think that the sell off, the possible second leg down, could be pretty strong. So I'm really interested in selling a bar 40 midday reversal down. I'm a little less interested in buying for some sort of bounce here, but you definitely can. I mean, if you sold the close of 16, you sold below, and you see 17, how do you feel? Probably not great. So you can see 18 is going to your entry price, and those bears are buying back shorts. That's probably a big piece of what's causing this bounce. So what do I think the odds are that this turns out to be a big bear trend day? And by big bear trend day, I do mean we pull back, we get a second leg down. You'd argue a leg one, leg two sort of bear trend day. But what do I think chances are? Um, Probably. No, I'm not. I don't know. I'm not quite ready to say 50. I mean, you could argue. I mean, bear trend from the open, and then we might go sideways the rest of the day. That's possible. Um, but what are the odds? It's a big bear trend day. I don't know. Maybe 40% chance that we get some sort of swing trade down around the middle of the day. I think something like that. Again, if you sold the close of 16, you're not overly thrilled with how 17 and 18 look. So a lot of those traders might buy back shorts. We have another open gap with the 15 low and the 18 high. So, am I going to keep this video going until bar 40? No. I'll probably end it reasonably before that. But if I do take trade later, and someone asks about it, I'll mention if I did take that bar 40 trade. If the setup comes, right? That's the whole big thing. So what's going on here? Bears are buying back shorts. We've had a pretty protracted bear trend, and it's been pretty climactic the whole time. So it was a bit of musical chairs being short, because everyone knows at some point we're going to end up getting a bounce and a pullback. And the question becomes, when is that going to be? And I think the traders ended up deciding, if you sold below 16, you don't like 17 and 18, and they're buying back shorts, and that's causing 19. So I think we're going to close the gap with the 12 low and 14 high. I think also we're going to pull back from this. So let's, even if bar 19 closes on its high, we're probably going to get a pullback before we go anywhere. I think it's better to be flat right now. You could have gotten out, if you're really good, you could get out below bar 18, because you're not going to, bar 18 is a bad sell. So some traders who are really smart will do that, but it's also reasonable to just get out a couple points above bar 18. That's fine. Or you could wait to see 19 and then get out above 19. But you've given back a lot of profit. You've given back 10 points of profit if you did that. So that can be the difficult thing about that's the difficult thing about being short in these situations, is you probably have to be relatively quick to get out if you're going to do it, because then you're going to end up giving back a lot of profit, and that's just not ideal. So I'm gonna pause the video again. So do you buy above 19? I would not. The risk is huge, but you can exit shorts above 19. That's a reasonable thing to do. The tail on top deterring traders from buying, and obviously a lot of risk. So none of that is really all that excellent. But I do think that, to me, this is the bar that the bulls have now given up, right? So sorry, the bears have given up. So to me, this signifies probably the end of the bear trend. So for the traders who were shorting, they're probably all done shorting now, and they're going to wait till the market gets a couple of legs sideways to up, and see what we get. Where do we go to? It's possible that this 7 was a new spike. So we had attempted a parabolic wedge, but 7 was so large it might have reset the market cycle. And it's a big enough bar for 3 legs down. 1, pullback, 2, pullback, 3. So that's possible as well. So for me, I am going to wait and see what we get, as I have been, and see if we get some sort of pullback to the moving average and then a reversal down around the middle of the day. That would be okay. Or if we start to get some sort of bull move up and then a higher low major trend reversal, that would be okay. But I think the thing to highlight about right now is there's probably one swing left today. So it was tough to find a swing early in the day. There were theoretically swings. 4 is probably reasonable, but I'm not taking that. And you shouldn't never feel bad if you don't take something like that. And then, you're selling this close, I don't know. You're selling 9, I don't know. So too much risk of something like this happening. So for me, I think that, an important thing to think about is the concept of how many swing trades are left in the day. I think there is very likely going to be a swing trade today with a good signal bar. So I do think that, regardless of if it's a higher or low major trend reversal, or if we get a couple legs pull back to the moving average and then get a reversal down, that could be another area where we get some sort of swing down. So it's possible that 19 is the low of the day. What are the chances? Um, Maybe 40%, something like that. I mean, if 20 is a good bull bar closing your tie, it damages the bear's chances of that second leg down. So again, if I'm a bear here, I'm trying to keep these gaps open. These gaps are important. Especially, this gap's important, but obviously it's very far up. This gap's really important. So I think the bears are really focused. They know that we're going to pull back, and that's fine. They want it to pull back to the bar 13 high, the most recent sell climax high. 16 is its own sell climax, and that was a sell climax high, and 13 is its own sell climax. And this whole thing together is a sell climax. So the 13 high is going to be a target, probably resistance here, since we'll be around the moving average as well. And if we get into this area, I would pay a lot of attention to if this gap closes, because that would greatly decrease the bear's chances of getting a reversal back down. But as of right now, I am looking for a pullback and a reversal down and around bar 38 to 42. So that would be what I would like to trade. And if we do get some sort of bull move and then a higher low major trend reversal, depending on how good looking these bars are, that would be acceptable as well. What are the odds we just go straight up here? I don't know. I mean, probably not all that great. I think this was too much. We had chances where, if 7 closed on its high, even if 3 closed on its high, it could have gone straight up. If any of these had closed better and on their highs, it was a possibility for a swing up, but it just never really did. So as strong as this is really strong, but this is bears buying back shorts. So I think 19 was the quick bears buying back shorts, and then 20 is the remainder of the bears. So the bears who waited till the close of 19 exited above 19. That's what's causing 20. And in order for 21 to continue up, the bulls are going to have to buy above 20. So we might start to rally here, but for me, I'm not really interested. I'm more interested in after a pullback, then you could look to buy, or a pullback and then look for a second leg down from this. Because again, this is a breakout on a higher time frame. We've discussed the 30-minute chart of it today. So it's nice to be back. Nice to be back trading. I am going to wrap up this video, and there will obviously be an end of day review today. I do plan on doing, Tuesday? I do plan on doing a trading segment and a daily review every day today. Or every day this week. Yeah, that's it.